Well, what's going on, guys? Welcome back to Let It Grow Investing. I am Jeff. Thank you very much for stopping in and checking out what's going on with the market with me here today. We're going to have a short week. We're going to have a modified schedule, Thursday closure. I believe we are going to stop trading a bit early on Wednesday. Market will be reopened on Friday. We've got PCE. We've got some other stuff coming out. And yeah, we're going to hop right into this one. So for week 48 on the investing challenge, we're looking at 5 names. We go ahead and buy one of those 5 names based on the results of the polls, whether it's on Spotify or if you're on YouTube or simply going onto the Facebook group and getting your vote in. So we were looking at Eli Lilly, Micron, Broadcom, Netflix, and Amazon. Netflix did operate a little bit different than I expected this week. I thought it was going to drop. It started rallying on Monday after that terrible streaming presentation of the Paul Tyson fight. Kind of surprisingly so. But anyhow, we were looking at 2 here that tied, right? Micron and Eli Lilly. I have decided to break the tie and go with ticker LLY. Why? Kind of because I wanted to. But Micron, we got more upside. But I have been buying a ton of Micron stock in my brokerage account. I have not yet bought Eli Lilly. We have around 39% of upside compared to Micron's 46%. And I really wanted to get into the name before it goes into straight rally mode. It did come up off of some of the lows, lower 700s. I think we're in the mid 740s right now. So I'm going to be buying ticker LLY on Monday on our Webull account here. So if you need help getting started, I do have links in the description for Webull, for crypto.com, for E-Trade. There's some great offers out there with Webull right now. Crypto.com, man. Crypto has been going absolutely nuts. Bitcoin the other night was at 100,600 or 700. I'm not too sure where it peaked out. It has since fallen. We're back down to like 96,000, I want to say. But man, the run in Bitcoin, hopefully you guys were here back when Bitcoin was, 17,000. I said, this is the time to buy. Hopefully you got in and you have, 4x gains in about a year on Bitcoin. Man, I hope so. If that was a time where you listen to, someone talking to you and saying, this is the moment, it is bottoming out. Now is the time to pull the trigger. Congratulations. You've made a ton of money. And I really haven't pushed the fact of buying it any other time, right? I haven't said at 60 that I'm going in on it. I wasn't calling that. I really didn't think that the last month was going to be, 40, 50% gains in crypto. I didn't think that was going to happen like that. But crypto is very unpredictable on a lot of different things. The altcoins are going absolutely nuts as well. So, yeah, we've got all that. We've got, Target earnings came out. I'm going to get right into that. I'm going to try to talk about what Target was doing and what's going on and why that one has some price upside right now. Well, first up is going to be, actually, you know what? Let me just run through all of them so I'm not holding you guys hostage for week 49. The 5 stocks of the week are going to be Target, NVIDIA, AMD, NEE for Nextera Energy, and CELH for Celsius Holdings. Now, Target. They reported earlier this week. They went from the 150s down to around 124, 125. We're getting around a 3.7% dividend yield, starting yield right now to buy this one. They pointed to the fact that consumer demand is weakening. Their numbers weren't as great. Q4 might not be as strong as they were expecting for the holiday season. But I think we've got a good value proposition to get into this thing with lower cost on it and less downside than we were potentially previously anticipating. So let me go ahead and pull up Target real quick. I've already done this and I have to do it again, but I'm going to, do that for you guys. So let's go ahead and pull up just where Target is going to be. And let's go from there. We're sitting at 125. We've got an average price target of 150.27, about 20% of upside. I think that this is a little bit overblown. That is why I'm looking to add to this one. Target does around 20% of their business in grocery, where Walmart is going to do around 60% of their business in grocery. So Walmart is going to be, not have the big swings. They have smaller margins, but they're going to get people in and out of the business or in and out of the stores and continue to do those sales, right? Target is going to be more of a premium operator. They're not going to have as much in grocery. So I think that consumer demand is going to affect Target a little bit more as they have less commodities, less staples. And, Walmart is going to be the spot that everyone's going for groceries. So I think they're going to pull a premium there. Walmart probably does deserve a premium valuation for the business model that they do run. But I think Target is oversold, and where Walmart's going to give us about 6% of upside, Target's going to give us 20. Costco is back to negative numbers on their upside at last check. So Target's going to be stock number one. I think it's oversold. I think that their quarter is not going to be as bad as they previously anticipated. I think that consumer demand is still strong. I don't know how, but somehow TV prices keep getting cheaper, and I think they're going to have a lot of loss leaders to get people in the door to get back to shopping. So Target is going to be stock number one for week 49. Stock number two, we're going to look right into NVIDIA, and I'm going to try to keep checking back and make sure that my browser is recording. Stock number two is NVIDIA. We're sitting at 141. Average price is 174.87, around 23% of upside. 23% of upside. Now, NVIDIA, let me pull up this report as well. I'm going to share this one. We outperformed on EPS versus expectations, 81 cents adjusted, 75 cents expected. Revenue of $35.08 billion, $33.1 billion expected. Now going forward, we're looking at $37.5 billion. That is what the number that NVIDIA is saying. Less from analysts, but NVIDIA is probably going to blow that number out again. That's just what they do. They sandbag the numbers and they come out and, they're going to report $38 billion worth of sales or revenue in the quarter. Absolutely insane. Crazy amounts of money every month out of NVIDIA. We are looking at a company that is going to continue to rise 94% revenue on an annual basis during the quarter that ended October 27th. Now, I pulled it up on Reuters, and it's about 110% for 2025, and then another by 217% by the end of 2026 from here. So another potential 100% revenue growth over the next 2 years. Just crazy. The fact of this thing trading down is absolutely, it just blows my mind. But the reason that it traded down was the fact that they pointed that their margins were weaker. Now, their margins were weaker. They went from 75% to like 71, 72%. That is insane margins for any business. And most other businesses in the S&P would sell half their business in order to get margins that were 71, 72%. So the margins coming down, I think there was more cost associated with their Blackwell chips. I think there's some other things that they were pointing at from, affecting their bottom line and that actual margin. But still, massive margin, massive revenue growth. And I think that this one shouldn't have traded down 2% on this quarter. That was a blowout and a raise on guidance. It's just crazy to me. But I told you guys that was probably going to happen. If anything was slightly off or slightly amiss, it was going to be a case where NVIDIA was not going to go up. And that's what happened. So that is number two. I still think that we have plenty of room for the next 24 months for this thing to continue to surprise to the upside on these numbers and on their homework that they are turning in at the end of the quarter. Number three, we're going to look at one of their rivals that is trying to chip away at just what they're doing here. And that one is going to be AMD. Now, AMD, they are also developing some AI chipsets. And they were looking at potentially around $2 billion of revenue on their chipsets. I think it was the MI300. I might be wrong on that. I'm not the tech guru that I'm sure some of you are. But AMD was predicting around 2 billion, and now they are calling for it to be about $5 billion. So this thing has traded down from some of these peaks back north of 200. We're at 138. We got 34% of upside, average price target of 185. I do believe that the AI space is large enough for AMD and NVIDIA to operate, and both have a good amount of market share and enough business for both of them to be happy. So I'm thinking that AMD, as they're in the early innings of developing, what could be a great chip for them to make, I am thinking that, it could be a better entry into AMD than possibly what NVIDIA is going to return, as, some of the NVIDIA earnings might be a bit smaller. Well, not smaller, but the fact that AMD is going to actually be in that space and trying to operate as well. So that is going to be number 3. AMD, for the fact that they are getting more and more into NVIDIA's business. They are looking to build out more and more AI chip space. And they're also developing something that is already selling more than what they were anticipating by, 150% or so higher. So that is number 3, AMD. Number 4. How are we going to power all of this demand for electricity? These AI chips and everything that is powered by AI needs a lot of energy. So Nextera is going to be my utility pick for this week. And it's a tough thing, right? I don't know that a Trump presidency really points to green energy, but AI is going to point to needing more utilities. We're going to need more in the way of electrification. We need more on that infrastructure side. We need more for EVs. We just need more energy. We need more. That's just the way that it goes. We just demand more and more out of every device, every outlet, every plug that we plug in, right? So Nextera is going to be a leader in green, right? But they're also going to be a leader in utility as far as the growth rates that they are able to churn out. Other utilities are mid-single digits, high single digits. Well, the growth rate on Nextera is probably in the mid-teens, 15 to 17% growth rate out of Nextera. They did trade down after a Trump presidency win, but that gives us a better entry point here. So we're at 76. Average price target is around 87.60, 15% of upside. If you go down to the chart, you can see we did come back down. This thing, I was buying it back here in the 50 range. And if it gets back into the 60s, I will likely be adding a good amount more into this one. But I am happy with Nextera, and I'm going to continue to buy this thing, regardless if you guys pick this one or not. So that is number 4. Number 5 is going to be Celsius Holdings. The ticker is CELH. I already told you guys all the names. I don't know why I'm creating drama and making it dramatic about which one it is. CELH, right? We are down 73%. We are looking at an energy, not company, an energy drink company that has around 50% of upside from here. Why Celsius? Well, one, I think it's a growth stock that has been, kind of pummeled with all things market related, rates coming down, but the treasuries are actually remaining higher. It's going to affect a startup company, a smaller company. I think that is eventually going to get rates back in line. I think that they're going to start coming back down to earth. But the other thing that I am seeing that I don't know if everyone's seeing or if it's just me, I do think that Bobby Kennedy Jr. is going to play a factor in what goes on in our food and beverage business. And I think that Celsius could be a huge benefactor of him being in office. Now, that comes with saying that, yes, Monster and Red Bull have owned this business since they've come into the market. Monster, I reported, a couple episodes ago that they were one of the largest gainers in the market since their inception. And it was just, a huge return of anyone that bought Monster Energy stock. Celsius has also been doing great numbers. But Celsius, why them over Monster, or why them over Red Bull? Well, Monster, Red Bull are already matured out companies. They're much larger. They've already had a lot of those gains. But Celsius is on their heels. They are trying to carve out being a number 3 in that market. And right now, the fact that Bobby Kennedy is going after a lot of different food and beverage that are maybe not as healthy, that might hurt Monster. That might hurt Red Bull. Why Celsius? Celsius has no aspartame, so no artificial sweeteners. They have no high fructose corn syrup, which is another Kennedy, no. They've got no artificial flavors or dyes. So that is going to be huge in the way of what the consumer is going to be, pretty much focusing on, as Kennedy is saying, these things are all bad for us. We shouldn't have them in our food. We need to get them out of our food. So they're already in that space. Monster and Red Bull are not. I think that might push more and more people to Celsius, with rates coming down and them having enough cash to move forward. So it might be a perfect storm for Celsius to start moving higher, as they've come down around 73% this year. We've got around 11% of downside and 145% of upside at the top. Like I said, 50% of upside on the average. I think the risk reward proposition here is very, very strong for Celsius. Now, I did look at some other names this week. I was watching what Warren Buffett was buying. He was looking at Domino's Pizza. He did buy DPZ. I don't see the value proposition there. There's only around 5% of upside. Yes, consumer demand might push us from more expensive product into something like a pizza. You might not be able to afford other things right now, where you can get a couple pizzas for your family and feed them for, $15 at Domino's, right? So I'm thinking that that's probably why he's looking there. You're getting a company that is increasing their dividend, although it's at like 1.5% right now. One that he sold, though, that I like more than Domino's right now, if I was going to pick between the two, would be Ulta. He sold this one. It was probably a pandemic darling for him, something that, was really at the bottom, at the depths of the pandemic. And he rode that current higher, and now he's sold out of it, right? So now Ulta's at 338, average price target's 405. Why would I buy this one? Well, Ulta just did around a $3 billion share repurchase that they authorized in August, right? So that is going to increase their earnings per share, as now there's not as many not as many shares to take those earnings. So they are pointing to the fact that they can return double-digit EPS growth over the next couple of years, and that is going to be huge for them. They are saying that, yes, the consumer demand is weakening, but the fact that cosmetic sales are very resilient and very strong for this time and for this market, right? So I think that for me, if I were to pick between Domino's and Ulta, I'd probably have to pick Ulta. One, you have more upside. Two, I think it's a better value to buy that one right now. But in the same breath, if I had to pick between Ulta and 20% and Amazon, I'm going Amazon every time. So there's always another option. There's always another angle. There's always someone looking to buy something that you wouldn't buy, or maybe I wouldn't buy, but they have the reasons, and hopefully Warren gets this one right. I'm not really in either of them, right? I'm not in Domino's or Ulta, but I was just looking between what he sold, which was Ulta, and what he's buying, which is Domino's. He also sold Floor and Decor, FND, and I'm not too sure I agree with that one either. Again, as rates come back down, I think that more people are going to be doing more home improvement, more home sales are going to be out there. They should have more flooring that they're going to be selling to all these people that are looking to build new homes and furnish, or rehab a house or fix up their living space that they have right now. So I don't necessarily agree with them. I'm sure he has his reasons, but that's what I've got for you guys this week. NVIDIA is now in the Dow, which also is another driver, which they don't really need another one. But yeah, that's what I got. We got Bitcoin going crazy. We got NVIDIA staying kind of flat. We've got Netflix going up when I thought it should go down. We've got Tesla continuing to drive higher. That one has never been really valued normal, right? It's never been valued normal. I did say that previously. The Mag 7, when I'm looking at that one, NVIDIA, I think, is fairly valued. Tesla, depends who you talk to. That one could be overvalued or undervalued. I probably have it in a bit of an overvalue right now at 340 or 350. I think that needs to come back down to earth a little bit before I buy that one. Apple, overvalued, slightly overvalued, right? That PE is probably sitting in the low 30s. I would probably buy that one in the mid 20s. Microsoft, fairly valued. I could go through all the PEs on all these. I'm basing it on PEs, their traditional 5-year valuation, and where they're at right now. Microsoft, I'd look to buy more of that. Google, fairly valued to slightly undervalued, but you have to look at what the DOJ is saying. The fact that they're trying to sell off Google Chrome or say that it's a monopoly, they got too much pull, and making it the standard browser on all these different devices. Which, I mean, it's their device, it's their hardware, so it makes sense that they put their stuff onto the hardware. It doesn't. I don't understand why Android is getting punished for having Google as being the main browser, right? I don't understand that, but that's what they're looking at. So Google, undervalued, but they have issues. I don't know that those are going to last. I think they already kind of looked at that in Europe, and they didn't have that as the main browser there, and it really didn't change anyone. They're all still using Google. So we've got Google, Alphabet I covered, which is Google is Alphabet. Amazon, I think fairly valued. I'd say that one is still in the buy target for me. Apple over Tesla, I'd have it come down. No, Netflix, I didn't do too much work on that one. I don't even know if that's considered anymore. And then what else? Microsoft. Yeah, that one is fairly valued. I'm trying to see if that was all of them. I'm probably missing one because I can't think of them off the top of my head. But anyhow, that's what I covered earlier. These are the stocks I'm looking at for this week. Eli Lilly's getting the buy, as I think 40% of upside on Eli Lilly just makes sense. I don't have any of it. I'd like to build a position in it. I was trying to buy at like 705 or 715. It got a little bit away from me. And, I'd still buy, nibble in at 745 and see what happens with this one. So again, get over there to Let It Grow Investing on Facebook, vote on Spotify, vote on YouTube. Get your votes in. Let me know what you think. Am I crazy? Do I need to be buying these 5 stocks? Does that make any sense? Is there something better? Should I be buying Ulta? Should I be buying SoundHound? I still think that SoundHound's a very good early proposition to get into AI as well. A lot of different things out there. So if you got comments, you want to see different stocks, please let me know. You can let your comments be heard on Spotify, on YouTube, on Facebook, whether or not you're talking to me. I mean, this is still a small group. I'd still, talk to a lot of the people that listen to this thing. Let me know. So that being said, that is all the time that I've got for this week. After recording this one once and it didn't work, and hopefully this one goes through. And I still have to pick out which computer I'm getting to get away from a Chromebook, as Riverside or Spotify is not supporting the Chromebook, or that's why I'm having so many problems. But that being said, have a great Thanksgiving to those that celebrate. And hopefully the market is in our favor for this week and going into the end of the year. Hopefully we see that Santa Claus rally. So thank you guys, and I'll catch you in the next one. Take care.